So today, I think India is the one who has done wonders, which started from telecom revolution.
Something like CSR, which is
Something like a CSR. Exactly.
Hello everyone and welcome to the 55th episode of Cedrus Knowledge Series. Today we have between us Mr. Balasubramanian, who's very fondly called Bala in the industry. We are going to have a very interesting topic today, which is nothing to do on investments, but to talk about more of how the mutual fund industry has evolved. There is also a very famous book which came way back in 2004, which was called Fortune at the Bottom of the Pyramid by C.K. Birla, who's been a marketing guru. And the basic crux of the book was that how corporates can earn a better profitability by focusing on the lower strata of the society. Today, as we speak, the mutual fund industry has gone through a tremendous evolution in the last 30 years. And the only difference is that not only are the financial companies becoming profitable, but it's helping the population at large. That is what today we are going to discuss as to what has happened, what is happening, and what you expect in the future as an evolution to mutual funds, in fact. So, Bala, my first question to you is related to mutual fund evolution itself. And I think it's to do with how have mutual fund played a role in democratizing investments?
This is interesting, Nilesh. First of all, thanks for having me part of your 55th show, and I'm glad I could participate and give my insight. I think the mutual fund industry evolution, if you take, fortunately, I've been part of the mutual fund industry. I can at least I can mention that pre-regulation and post-regulation, both have been part of the MF industry. When I mean pre-regulation, the SEBI regulation itself came only in 1994. I joined the mutual fund industry before the regulation existed. There was no SEBI. Of course, it was a part of the, boardroom kind of discussion. And that's why I started my career in 92. From 92 and then I think till about 2000, 2002, 2003, mutual fund means it's always considered to be the rich man's club types. And if it is stock market means it's a rich man's club. And it was not reaching the masses mass in general. And there was a Bombay club used to be there. There used to be a Calcutta club. And in fact, every location, there used to be a stock exchange. There used to be a Chennai stock exchange. There used to be a Bangalore stock exchange, Baroda stock exchange, Guwahati stock exchange. Mm-hmm. So because of the stock exchange, generally, it's a mix of investing and speculation. Even the mutual fund themselves were having the speculative nature, in the sense that NAVs came in later, and it used to be listed in the market. I myself have seen some of my father investment in the mutual fund going by 7-8 times in those days. Like Can Bank mutual fund investment those days, JSE, where I used to work. They used to triple or go by 5-7 times in the market. Therefore, people used to think is the rich man's thing. I think the real evolution of mutual fund came in 2002. And that is the time I think SEBI came with the concept called taking the mutual fund industry to the next level of growth and taking it to the mass. I think the book that you mentioned about the bottom of the pyramid, one of the bigger theme of C.K. Prahlad is what is the bigger advantage of India. What we used to think that Indian population is a liability, he converted population to an asset, which is a simple way of looking at it, but it is very powerful from an economic driver point of view. Though the per capita income, as you go down the population, per capita income is not sufficient enough for them to make investment, even for them to meet on day-to-day basis, meet their needs them itself, they will have short of funds, right? That's the way the bottom pyramid functions. But I think he created the aspiration that how if we start focusing on bottom of the pyramid, and increase their aspiration levels, if their income level starts going up, then population of India could potentially become an asset. So that's something we are now start seeing. The per capita income, if you take, it used to be about $1,200. Now it's gone to almost about $4,000 kind of things. That's the number currently it has come. In the last 10, 15, 12 years, there is a clear focus on increasing the wallet share of people in the country through various means of government initiatives. This is where I think mutual fund started playing a role. That Aditya Mutual Fund, we've been in the industry for 30 years. When I took charge in 2009, one of my bigger aspiration to have presence in about 543 MP location in the country, Member of Parliament location in the country. There are about 543 seats in Member of Parliament. I said we must have presence in every MP location. That's the only way we can penetrate in the mutual fund industry. Some of us who have deep pocket brand like Aditya Group supporting our brand, therefore we all used to expand. But many other people never felt that they need to expand. They thought that they have presence only about top 4-5 cities and still run the business. So the expansion became actually the key. It became a new mantra thanks to the SEBI regulation. The SEBI regulation came that said that we have to move away from having a concentration. Mumbai and Delhi are not the capital market representatives. Bharat is the capital market representative. The moment you change the definition, going from Mumbai, Delhi and Bangalore Silicon Valley, Mumbai is the capital market, financial capital market. Then Delhi, of course, is a complete business. Then Kolkata is again mix of everything. So moving away from these 4-5 cities and then go down to the deeper parts of the country, then suddenly you'll find a different type of people, different type of needs, and that aspirations there is a little different from what you see in the bigger places. So that's where the expansion started happening. I still remember when Maruti came into place in 1992, they were the first one to introduce Maruti 800. It was to fulfill the aspiration of India. That is the way mutual fund also, when we began in 2002 through various SEBI circular, that's the first time ever SEBI, we always think that regulator means is a watchdog. His job is to punish people, wrongdoers, not punish people, wrongdoers. Anybody is wrongdoers, whether it is a mutual fund or in the capital market, in equity, any wrongdoers, their job is to punish them. Then they also started wearing the hat of development. So they actually started incentivizing people to look beyond Mumbai, Delhi, top 8 cities, top 15 cities. Then they created B15 cities, they became B30 cities. And today, the 5.5 crore investors the mutual fund has got, I must mention, 60% of the customer base is coming from the non-B30 cities. It is coming from far-flung location of the country. That is the way I think mutual funds have evolved. Second is, I think one of the master stroke, I always call it the master stroke. It again came from SEBI committee. I was also fortunately part of the committee, which is called Mutual Fund Advisory Committee. The first committee I was there in the 2002 circular when it came. They actually said that you must focus on financial literacy. It's easier said than. You can always say you have to do a financial literacy in the country and go and educate people. But where is the money? You can conduct activities, but you have to have money. Then they found a solution. If you don't have money, I'll give you money. How the money comes, whatever the profit guys we make, please keep aside some money dedicated only for the education purpose.
Something like CSR, which used to...
Something like a CSR. Exactly. See, even a CSR, otherwise today is in our country, corporate social responsibility, it is said and it is not done as enough as much one should do. The moment you create a separate kitty, and that kitty is meant only for that purpose. The moment you define the purpose for which the kitty is being created, to large extent you will be genuine to spend their money only for that purpose. In fact, the mutual fund also encourage to keep aside 2 basis points from the kitty that you have created, the profit that you are generating. Of course, in our early days, even the mutual fund profit used to be very, very small. We never used to have large profit for us to keep dedicated money for investor education. But still, SEBI came with the formula when the industry size was small. As the industry became bigger and bigger, and then as the kitty also kept rising, then you saw the money being spent on financial literacy, and education became the key. Then goal-based investing, purpose-based investing. So all those things started evolving from a mutual fund point of view, and that's something I think you rightly mentioned about C.K. Pralad theory. Started working for getting more and more people to participate in the Indian capital market, moving away from making mutual fund with the tag that is a rich man club, making stock exchange a rich man club, moving away from that rich man club to the entire nation can participate. So that's where it came. In fact, I must also mention some of the revolution that has happened in our country. We must give credit to them, which is the NSE when gave a birth in 1995-96. So they actually expanded the culture of investing in equity by spreading across the country through the online trading platform. That also helped. And mutual fund also along with that started expanding to reach the bottom of the pyramid.
SEBI's role from being a watchdog to a facilitator.
Yes.
Actually. So that's what has actually helped democratize mutual funds in India.
Exactly.
In fact, my second question to you was something which you just mentioned, that you were the chairman of AMFI from 2016 to 18. And that's the time when mutual fund Sahiye campaign was launched very successfully.
Correct.
And those were the times when it was just post-demon period, when this whole campaign came.
This is before
demon, but I think it was the same year.
It's a coincidence.
Yeah, almost the same year, in fact. And it became a nationwide success. A lot of people, in the marketing industry, they do talk about the success of this campaign.
Correct.
And so what were the guiding principles behind this initiative, and how did it influence the investor behavior?
So in fact, we used to do a survey, and the sense even as industry, all of us used to play the role of development and teaching people, imparting knowledge how the mutual fund operates, what are the risks that mutual fund runs. Sometimes our return will be extremely horrible, but not that necessarily we are bad investment manager. Because of the market. Sometimes we lose money because of the market, we make money because of the market. But what remains permanent actually is the upward graph. Return remains permanent if you stay invested in the long term. So that's the way we all used to tell. And mutual fund subject to market risk was actually the bigger, at the end of every session I'll convince you for investing in mutual fund. Finally I'll tell you mutual fund subject to market risk, ab dora dekh ke paisa dalna types. Right? I'll actually give you equal warning. As I give you bullish view, right? Both have to be equal. So I can't just give bullish view and show the moon and then get away with loss being made in the portfolio. That we cannot do. In order to ensure that you'll also have a loss, for which we used to protect ourselves by the tagline called mutual fund subject to market risk. We used to do a survey with all the distributors. And everyone used to come and tell, Balaji, आप mutual fund subject to market risk को निकाल दो. उसको वैसे कोई आता नहीं. And this suggestion is to come. Then if ये तो निकाल नहीं सकता है, but can you give some other tagline? They will say mutual fund subject to market volatility. Instead of saying market risk, subject to market risk, is a subject to market volatility. ऐसा वो दोनों एक ही होता है. Volatility बोलो आपने risk बोलो, ultimate outcome remains the same.
Right.
Then we used to debate on this quite continuously. In fact, my predecessors who are also driving these financial literacy educations in AMFI, we started that. It was started in 2013-14 types. My predecessors were Milind Barve, Sandeep Sikka, then Leo Puri. Then I took as a chairman. So when I took as a chairman, of course they handed over to me. Then we had huge discussions. Then we said, as a committee members, we said we must keep something. We cannot remove mutual fund subject to market risk. That's the real. Mutual fund subject to volatility is real. You can't change the real and saying it is not needed. It is needed. It's like smoking cigarette is injurious to health. It is a right. There is nothing wrong in the statement. You smoke, don't smoke, that's your problem. But the risk of smoking is real. Therefore, mutual fund subject to market risk is real. That has to be retained. Then what is it we can do to overcome that things? Can we keep something above that, which neutralize the fear that investors may have listening to the mutual fund subject to market risk? So when we explained this to a creative agency, the creative agency we invited, I spent time with them. We were all briefing them in terms of how the markets are function. We said market was 1,000 index, Sensex, maybe in 90, 91, 92. अभी 1000 से इतना ऊपर चला गया है. Then we say 1000 के बाद नीचे आया, they went up 3000 के बाद हर्षमेधा स्कैम आया, उसके बाद और मार्केट बढ़ा, उसके बाद टेक्नोलॉजी बबल स्कैम आया. At every interval, market got tested. Market went up, then the rise was tested, and it came down, it shook the confidence. At each level, when we created the model, at every interval period, 3-4 interval, market confidence got broken. Again, confidence came back, confidence got broken. This is the way market functioned. But utna hone ke baad bhi, what is the experience of investors? Somebody has stayed invested. Then we said, we showed them on the screen, boss, इतना तो होने के बाद भी return अच्छा है investors के लिए. ये सही है नहीं है? ये तो वो सही है. Then the mutual fund सही है. The tagline came. Then the agency caught this the fact. The fact says what you guys are doing is real. But the moment I pay attention onto the interval, only that particular fall and rise. And the rise I get excited. The fall I become sorrow. I start feeling sad when the fall comes. But if you take together, that excitement and fall, if you take together, then the number of time you got excited is far higher than the number of time it would have remained sorrow on the market, sadness, which is nothing but a rise and fall. The moment we explained this to the agencies, then they gave a tagline called mutual fund sahi hai. Even I was a bit worried whether it's a strong word to use, mutual fund sahi hai. So I was a bit worried as a chairman of AMFI. Then I actually was created jointly. Because luckily in mutual fund AMFI committee, I was a chair. And I had people representation coming from HDFC, Nippon, SBI, and IPRU, and DSP. We had a few other people coming from UTI. So they're all good set of people they're part of my team. They're all marketing gurus, I would say. I am not a marketing guru. So I'm more of investment guy. But these two combinations really worked well to arrive at a final mutual fund size as a tagline.
Right.
So when we went to SEBI and made a presentation, in fact, they also got so much excited listening to the ad. And then they said, I think seems to be good, but you guys can decide what you want to do. They never gave me approval.
Right.
They said, whatever do you think is right, you guys go ahead. So I immediately said, announce the press meet and then take it off from the ground. Once it taken off from the ground, and then we said every mutual fund should adopt the tagline in their communications. So Bajaj Mutual Fund also should say mutual fund sahi hai.
Right.
HDFC Mutual Fund also should say mutual fund sahi hai. IPRO also should say mutual fund sahi hai. SB also should say. Therefore, we put in every communications. Aditya Mutual Fund sahi hai. We used to put this as a tagline. So that's the way it became very powerful. In fact, the first few ads when we created on mutual fund sahi hai, I think some of the ads were targeting the bottom of the pyramid. I think what you just mentioned.
Absolutely.
Somebody is traveling the train and talking to each other.
Correlates a lot with the
common man.
Yes.
So when I first created, I said all the conversation, somebody is standing in the market. When I mean not the stock market, it's in the either the Bajaj market or on the bus stop is standing and then having a samosa and having a coffee. And in that time you should talk about mutual fund sahi. So that's why actually the first few creations were targeting only the common man in the country.
Right.
So I will not say bottom of the pyramid, common man in the country, basically middle class population, who have been saving money in multiple ways, but not necessarily on those instruments which can create them a wealth for the future, which can help them actually build their future to meeting their goals and so on and so forth. Therefore, we put it like that. Even we created one ad wherein we said that a child is born but is getting worried about his marriage or worried about education without planning for that education.
Right.
Then I said, you're worried about your daughter or son who was born yesterday, thinking that you're going to get them married now. You have another 20 years to go or 25 years to go, therefore you start saving today.
Right. Goal-based investment.
Goal-based investing.
Yeah.
These are the very strong messages we started creating. In fact, even the character that we chose the characters are common man kind of characters.
Right.
So when you actually link it to the common man understanding, then finally we said that this has to be part of the coffee in a coffee table discussion.
Right.
When you have a morning breakfast, it should be part of the breakfast discussion, lunch discussion, dinner discussion, at home family discussions, and therefore whenever you have take a sip of a coffee or tea, the mutual fund should also come part of your discussion, which is nothing but a common language discussion. That's something which did wonders. I think what actually gave a push big time, it is the demon.
Absolutely.
And I think the moment next year the demon came.
Right.
So one side we are taking off mutual fund sahi, the demon is coming. Then mutual fund become a natural alternate to the cash that everybody has got.
Absolutely.
So you have a lot of cash holding, either accounted or unaccounted, whichever you take it. The reality is cash is there.
Yes.
Then what do you do with the cash? You go and put it in the bank. After that, what do you do? Somebody have to park your money. So you can't go deposit the डाल सकता है, but deposit rates will be, and the more money comes, deposit rates will not be there. That is the time mutual fund also, suddenly mutual funds IA came in handy. And these two combination put together, if you look at the growth of the industry in terms of retail participation coming in the mutual fund industry, was the highest during the period. 17, 18, 19 if you take, is the highest. Of course, now what I've seen in the last 2 years is that something different. But the initial growth came that period, that is an outcome of making mutual funds IA as part of the every conversation that you may have with the coffee with your friends and relatives and so on and so forth.
And from elite to the masses, which you just
Elite to the
mentioned, that it reached to the masses.
Correct.
And with the 100 rupee SIP also, which mutual funds also supported by starting small investments.
Correct.
I think it actually reached the masses.
That reached the masses.
Yeah.
Even the Mumbai train, when we put the Mumbai train, it used to be part of the announcement systems.
Right.
While going in, so many people are traveling in the Mumbai train, and all common man travels.
Yeah.
We put it part of the announcement system on the before it says next station is Santa Cruz. The mutual funds IA will come.
Right. No, so do you think mutual funds can truly be, again now we go a little ahead, a default saving instrument, in fact, and for India's growing middle class and the lower income population, do you feel that mutual fund has the capability to be a default investment saving instrument?
So I have been thinking of this quite some time. I use this one word every time. I repeat it again and again. So for every investment needs, there is a primary and secondary.
Right.
For all of us as an individual, what is my primary investment vehicle? I go to the bank and give money in the bank and deposit. That becomes everyone's primary. It's not investment, it's a saving vehicle. So can mutual fund play the savings vehicles? The answer is yes. I think as the time progresses, mutual fund will become a savings come investment vehicle.
Right.
Because we think bank means it's a savings and investment. But investment generally should give the higher return over a period of time. Because investment is always for long term. Therefore, I must be able to participate in the India growth story. Therefore, the investment comes.
Right.
Savings is something your money should save, it should remain safe, it should be available for your emergency. At the same time, you must put the money there and decide where this money can go to various places. That's your savings. The way I see is mutual fund become the primary vehicle for both savings needs and investment needs, which is what currently is now happening. As the time progresses, people start realizing can the mutual fund vehicle be used for both the purposes, which is the case. Like mutual fund offers a liquid fund, which gives as low as about 5.5 to 6%, depending upon where the overnight rates are.
Right.
Then you go up in the curve, which will move from 5.5 to say 9%. If you go to the equity, there is no guaranteed return. But the rate of return will range from say 7% to say 12-13% kind of range. If somebody gets more than say 13-14% is lucky for him. But otherwise, on average, if you take for that say 10-15 years, that's the range in which it goes. So I think both the needs can be met through the mutual fund. Second is increasingly in the growing population, everyone has got both what I call it as a need and want. See, every middle class population, the first need is take care of your education. Then you want to get married. Then you want to buy your 2-wheeler or 4-wheeler for transportation. Then you want to buy your dream house. Then you want to plan for your children education.
The financial planning.
Which all of us, you all do the financial planning.
Absolutely.
If you look at the life cycle of every citizen of the country, the life cycle, there are needs. Needs are the large component of the savings planning. Needs. To fulfill your needs, you have to plan. Want is something as part of the greed. You want to create more wealth. Instead of 2-room kitchen, you want to go to 3-room kitchen for 2 people. You can say there's a want, a luxury, and so on and so forth.
Aspirations.
Aspirations.
Yeah, absolutely.
Whichever you want to call it, you can call it. But that's actually comes separate. But the need component is almost about 70-80% of the Indian needs are the needs only. The basic needs have to be fulfilled, for which you have to save. That's why I think mutual fund will play a very large role. So this will become a primary primary vehicle for both savings and investment, which is a trend in which will go. So people may say, would it come at the cost of banks? Absolutely no. My view is over time I have realized everything remains coexist. You will see the banking, the way US works. Today the US mutual fund industry size is bigger than the banking industry size. So India also, in my view, will go in that direction.
Wonderful. And I'm sure, it will, that's the next question, in fact, with the share of retail investors growing in mutual funds, through mutual funds specifically, has this helped stabilize the Indian equity markets against volatility? Just for example, what we have seen, there's been a huge outflow which has happened in the last 1 year through FPIs.
Correct.
Okay. And I think the stability came from the regular SIPs which were happening and the investments which were happening from retail. So, do you feel that they have become good stabilizers to contain market volatility in equity markets in India?
Definitely, that's a big change in culture of investment. Since I have spent more than 3 decades in mutual industry, in capital market, one of the common worry that we always used to have, FIs keeps on putting money in India,
Right.
whereas domestics are not investing, and FIs, when they remove, our Indian market becomes extremely volatile, and we always used to think we are at the mercy of foreign industry investors for the healthy capital market. And now it completely reversed, because domestic savings are coming through the mutual fund, and therefore we become the strong counter force for foreign industry investors. We own actually today, mutual fund owns close to about 13 or 14% of the Indian market cap. Then second segment, which I think the government also realized the importance of creating a structurally sound investment pattern that we have to create for making Indian capital market become superior to the rest of the world, which is nothing but investing the retirement funds of PPF, etc. into the equity market. Second, they also paid attention to the NPS. Because we have large workforce in our country, which is self-help group kind of structure. Self-employed people. They are not working in a company but self-employed. But they don't plan for the retirement planning.
Right.
Then NPS came. So mutual fund one side becoming bigger. NPS is growing. Then EPF money is coming and every year coming into the equity market. Therefore, the pool of money, insurance companies also now have the large investors. If you look at the number of investors who are coming to the Indian capital market, other than mutual fund also is growing. Of course, mutual fund is the mother of everybody.
Absolutely.
And then others actually also support. In this process, domestic savings coming to the Indian capital market provides the much needed stability and also much needed capital. See, everyone wants to grow in life. So tomorrow, suppose you want to build your business next level, you need capital. Who will give the capital? Indian investors will give the capital.
Right.
And that's the way I think Indians' aspirations are being met, because today the risky capital earlier was not available. Equity is a risky capital. It was not available here. It was not available earlier. Now it's available through the mutual fund growing. This, in my view, will be the new trend will exist. But the only thing one has to just keep in mind, as more and more money starts coming into the capital market and chase the same set of companies, same set of stocks, there will be a period where, because more the money chase, lesser the demand, then naturally the return expectation should also be moderated. As long as we keep that as one of the checkpoints, to ensure that we don't feel, at the end of the day, what is most important for all of us.
Right.
We should never feel disappointed on the outcome after, say, some period of staying invested, which is either by not having high expectations, not getting too low return as well. But that, I think, if investor is able to actually get that point right, then the outcome would be far better.
Right. But the role of advisor also here becomes very important. Actually.
Yeah, that is why I think you will play a large role.
Yeah.
You will play a very big role in this space.
Yeah.
Setting the expectation for investors right, giving them advice on an ongoing basis,
right.
Which is, of course, you do every 3 months, you do a review with your customers. All those things, it's actually not review. I always say is review, reflect, and do course correction if there is a need, to ensure the portfolio continues to grow to meet your aspiration, not linking to the market aspiration, therefore your aspiration only. Market aspiration, market going up and that's a different direction.
That's not in our control.
That is not in our control. What is in our control actually? You set your expectations, are you able to fulfill your needs on the basis of your expectations. That's why I think Nilesh kind of advisors play a very large role.
Thank you.
Yeah.
Now moving from mutual funds to, something which is related to Gift City. And I think, again, there you were one of the pioneers. Aditya Birla Mutual Fund, I think were the first to set up office in Gift City in mutual funds.
Correct.
The interesting thing is last year there was a lot of products which came around inbound investments through Gift City, which means foreign investors or NRIs can invest in India through Gift City.
Correct.
I think recently we have seen outbound. where your typical LRS, which is liberal remittance scheme, through which Indians can invest abroad.
Correct.
This is something which is launched, and there are hardly any products. I think Aditya Birla has got, already 2 offerings which are there.
Correct.
In fact, so do you think this will benefit an Indian investor to diversify investments across markets and currencies?
See, as the wealth effect is rising, it also increases the need for the diversification. And all of us are used to investing only in India. And because we are, at the end of the day, we all like India. India is a good story. We have a strong belief that India will be the fastest growing economy. Therefore, all our savings and investments generally remains invested only in India. But having said that, as the Indian citizens' aspiration increases, that they have to get studied overseas, and maybe people may want to settle in overseas and so on and so forth. So we need to also build dollar assets. At the end of the day, assets that you invest in overseas market, it also provides an opportunity to participate in the other growth economy. And that's something it provides an opportunity. I think India is actually given that leeway for under the LRS limit remittance schemes to fulfill the aspiration of Indians to diversify their investment, which is already in India, to make it outside India as well. Going abroad, you're sitting in India, you can invest abroad. That's the way it has been created. GIFT City is actually it's been set up by Government of India to fulfill that aspirations of Indians, also fulfill the aspiration of overseas investors who are large population that resides outside the country but still want to invest in India. Therefore, this is a gateway for Indian to invest in overseas and gateway for overseas Indians and non-Indians to invest in India growth story. That's the way it has been created. In fact, we took a lead in this space, and we have been having presence in offshore market based out of Singapore and Dubai to cater the needs of overseas investors, including having a setup in Dublin via UCIT platform. We have UCIT platform to cater the needs of the global pension funds, NRI investors, and also overseas investors who are not foreign investors, both individuals and institutional investors. We have created a product. So GIFT City is one where we took a lead. And whatever product that we launched, we have seen reasonably good success. Where we launched a product to invest in China, when China markets are doing very badly. It has investments in emerging market, wherein large component of the portfolio is invested in China, Taiwan, Vietnam, Argentina, Brazil, and so on and so forth.
Ex-US and ex-India.
Ex-US and ex-Japan as well. That's something we did, and it has done very well. Therefore, it's a good opportunity for Indian investors. I think I call it Indian investors 2 types. Those who are not invested in India, they should first start investing in India.
Right.
Those already invested in India, but not enough created wealth, not sufficient enough for them to diversify, they should continue to diversify within India.
Right.
Those who have created enough diversification they have done, now they are looking for over and above that, and they should look at investing outside India. That's where it comes in. There are a lot of parents who want their children to actually build their career abroad and then send money to India for their family purpose, various needs and so on and so forth. For them also, they should start looking at investing overseas market, for which GIFT City products are available. Aditya took the lead. We have been having presence in this space for quite some time. And we also been understanding the needs of large NRI investors who wants to invest in India. We want to create a gateway. And in fact, today even our mutual fund, almost 4.5% of our AUM is actually contributed from NRI investors.
Okay.
Coming from Middle East and US, Europe, Canada. And we actually created a product exclusive for investing in India, based out of Mauritius and Canada for overseas investors. Because now this is the new one which I think will come. This is something GIFT City is going to provide the opportunity to come into. In fact, when we took office there in 2000, we took office in 2014.
Oh, okay.
And
more than 10 years.
More than 10 years.
Okay.
In fact, it was a barren land. Very few buildings are there. And today when I go, it's completely filled with lots of structures and buildings, offices. That itself is a reflection of how GIFT City is picking up.
No, so I think to sum this up on GIFT City, it's converse to bottom of the pyramid. It will be for investors who are typically at the top of the pyramid, because who want to diversify beyond India.
Correct.
And India is a capital starved economy, which means that you have access of NRI money as well as foreign investor money which can come to India.
Correct.
Which is again beyond FPI money which used to come.
Correct.
In fact.
Correct.
So wonderful. In fact, now coming to the future of mutual fund industry, and you being so actively involved and being a voice of the industry also, how is this evolving and changing? Citing the demographics, rising disposable income, and most important thing, the digital infrastructure. I think these, which we call as the three pillars of the
Indian
the growth
economy.
which we are seeing in the Indian economy.
Correct.
So how do you feel mutual fund will unfold in the next decade?
I think mutual fund will become, as you mentioned earlier, mutual fund will become the primary savings and investment vehicle, which currently about 5.5 crore populations of mutual funds industry. And we ourselves have got, Aditya mutual fund, got about 85 lakh unique investors. My view, these numbers will go by 3 or 4 times.
Wonderful.
So basically, I put only 4 times, not because of anything else. Population is 145 crore population. I'm taking household. So 25 crore household could potentially be the investor in mutual fund. Then you can imagine how much it can grow to. Right now we are putting 100 lakh crore size will become. My view will become over a period of next 10 years. It will become about. I think the way to put it, if Indian economy goes to about $5 trillion, the mutual fund industry will be roughly about $1.5 trillion.
Wonderful.
If it goes $10 trillion, and mutual fund industry will become about $3 trillion.
Okay.
So it's directly linked to the GDP growth, directly linked to the deposit of the banks. This will become bigger and bigger. Customer base also, in my view, will become about 5 times higher. So I think the mutual fund industry will become very large in the times to come.
No, and I think, again, we are seeing a very interesting trend that the money is coming from tier 2, tier 3 cities. It's not only mutual funds, but across consumption also.
Correct.
Like Amazon has now, they are delivering more to tier 2 and tier 3 cities than to tier 1 and metro cities, actually.
I think the point that you mentioned about connecting economy to the digital economy. So today, I think India is the one who has done wonders, which started from telecom revolution. Now digital revolution, and that has happened through the UPI,
Right.
which is the Unified Payment Interface, where in single click you can transfer money across the country without even going to the bank. And that something has now created a completely removed the barrier. Rural versus urban, earlier there used to be a barrier. Semi-urban and rural there used to be a barrier. Today, there absolutely no barrier. Today, you don't need to think about I have to migrate from rural to the urban India, because the rural itself now is getting developed. That is actually leading to income level rising. Second is some of the areas which government of India genuinely have been focusing on increasing the income levels, not in the cities. Cities will find its own way to increase income levels.
Right.
Like Mumbai city, I don't need to teach them actually how to increase your income level for a citizen. They will know how to make money. And whereas if you go down to the deeper parts of the country, they have a large pool of assets. How to monetize these assets. And some of the schemes the government of India announced is tripling the agriculture income.
Right.
So nobody talks about agriculture income doubling and tripling. So basically increase the aspiration of people how actually you grow your fertile land to grow multiple crops, therefore income levels can go up. How you can become self-employed. And today you will not believe if you go to the villages. I come from a village background. I know earlier some of the work used to be done by manual physical labor work, especially for spraying fertilizers, pesticides. Today the same pesticide can be actually spread using the drones.
Right.
The guy who actually used to run a tractor, now he knows how to run a drones. So now he is renting it out. Income levels are rising.
Right.
Because of city and connections, his income levels are rising by becoming a taxi operator. Number of taxis, when I used to live in my village, not even single taxi used to be there. And today when I go to my village, there are about 20 taxi followers are there.
Right.
That means income level, otherwise you will not have 20 taxis, right? His income levels are rising. The third, which in my view, I think as a country now increase income levels is the spiritual tourism. I am quite passionate about the spiritual tourism in India.
Right.
After the Ayodhya temple constructions, leave aside bhakti part on one side for the time being. Leave aside that religion, all those things, leave aside for the time being.
Right.
What good it has done for the people? It has actually moved people actually visit the place, income levels are rising, people are building business there, the income levels are rising. Therefore, the income levels going up in the deeper parts of the country will continue will see a bigger growth. I think if India grows about say 6%, or let us take 7% India, you'll see many parts of the country will grow about 8-8.5%.
One more interesting thing is, what you just mentioned. Varanasi actually has got, this year, the number of tourists visiting Varanasi was higher than Goa.
Correct. Correct,
Okay,
correct.
so like coming to the the religious tourism.
I remember when our Prime Minister made a statement while Ayodhya inauguration. This place should become like Mecca in terms of tourism, tourists coming in. In fact, some of my friends who lives in US and they were mentioning, "Hey, Bala, we came last month to India to visit Ayodhya temple and come back." So look at the way the narrative changes.
Absolutely.
So what does it mean? It actually increase the income levels. Tourism picks up.
True.
And the people who are living in that space for their living, for their living, they live in that place only. Now his income levels shoots up significantly, which is actually is the equilibrium,
Right.
equitable growth. Equilibrium should be among everyone. Rich will remain rich, no doubt, but as long as poor doesn't remain as poor and he also become reasonable in terms of his wealth, that is what I think is happening. This is why I am quite bullish on mutual. Ultimately, everyone has to save. Everyone has to build their future by putting the money into the right investment vehicle. So mutual fund will remain savings and investment vehicle. And Nilesh kind of advisors will also play a very important role because as the wealth effect increases, frankly your role significantly goes up. Rather need for your role rather.
No, but I think there are many more Nileshes required. I think that is one thing which I'm sure you will also agree to, that the amount of requirement which will increase to handhold and invest in the right products. I
Correct.
think that becomes very important.
Advise.
In fact,
Interestingly, you will be the one to tell your customers what not to do.
Absolutely.
See, I know what to do. In today's world, everyone is a master of everything because information available publicly. What is not known is the one what not to do.
What not to do.
So,
Absolutely.
person like you will tell people to safeguard their interest, what not to do. So that is why I think you will become more like a family doctor and family lawyer and family advisor to even protect wealth. So ultimately, beyond the point, not just savings and investment alone will remain key. Beyond the point, how not to lose money
Absolutely.
will also become extremely, as the economy grows, you will find some people will lose their pant and shirt for nothing. Therefore, you will become a savior of many. Therefore, there is high probability you will play the role of God as well.
No, so the thing is, I'll tell you a very interesting thing. What we do at Cedrus is we have a black book. Okay, so black book is nothing where we have a list of products and it keeps increasing, as and when we have, which we will never do. So coming to the last, which we are not doing is cryptocurrencies because we don't understand that space.
Exactly.
And being from the old school economic it's not got any kind of a you can say underlying asset. You can say there's no underlying.
Correct,
actually. And then so I think that becomes very important for for as an advisor also, having a list of products which they should not do. And I think mutual fund definitely is sahi hai. So that is that's the reason why most of the advisors are recommending majorly mutual funds. In fact, wonderful. Now coming to our last, and I'm trying to add a little bit of fun element to the serious discussion which we had, and it was a wonderful discussion. I'm sure our audience also has has got to know a lot about the history and what we can expect from the mutual fund industry.
Correct.
From a veteran like you, I think, who spent more than 3.5 4 decades in this industry, in fact. So we'll have a quick rapid fire.
Sure.
Okay.
Sure.
And I'll just give you a word and quickly what comes to your mind. Okay.
Sure.
Whatever comes to your mind. So it's you don't have to think.
Yeah.
Okay.
Sure.
So the first one is, and it's all related to our industry. So mutual fund.
Mutual fund remains primary vehicle.
Advisor.
Will remain key part of your every investment decision.
Equity funds.
Will remain as a wealth creator.
Now coming to this is very interesting actually, because I think a lot of money is now going into this fund. Multi-asset funds.
Fulfill the needs of the individual aspiration of investing across all asset classes.
Again, one more thing, this is again which I'm sure as India evolves into a more mature markets, index funds.
Index fund should be part of the portfolio as a diversification.
Okay. And the last, which I think now is losing interest, debt funds.
Debt funds is a protector when for emergency.
Okay.
You cannot ignore the segment. This always comes for emergency. When the time when the time comes for your real need, debt fund come in handy.
Wonderful. Thank you, Bala, for taking out time and visiting us. And I'm sure the investors have also, the audience which is going to be there is we have gone beyond investments. We have talked a lot about how mutual funds can be a very important vehicle for wealth creation. Thank you very much.
Thanks, Nilesh, and I also wish all the investors and viewers all the best and have the optimism and I have high hope on 2047 Vikshit Bharat that will become real. Therefore, participating in that growth is more important than having a skepticism.
Thank you.
Yeah.
Thank you very much.
Cedrus Wealth Partners, orchestrating distinctive wealth management proficiency since 2007. We deliver transparent, unbiased, and comprehensive investment solutions. Today, we manage more than 3,000 crore rupees in assets, proudly serve over 1,000 families and 3,000 individual investors, and with a team of 26 experienced professionals, we help our clients achieve their financial goals. Our 360 degrees wealth management approach integrates investment planning, risk management, tax optimization, and legacy planning. We focus on the 4 essential pillars of financial planning to create a strong foundation for your financial future. Our advisory process is mutually exclusive and collectively exhaustive. We provide uncomplicated advice. No ULIPs, no NFOs, and no structured products. Our portfolio offerings include managed equity solutions for superior risk-adjusted returns, novel offerings including hidden gems that provide pre-IPO and niche investment opportunities, and alternate investment solutions like private equity, real estate, private capital, and multi-index investment strategy. From humble beginnings in 2007, Cedrus has grown with a commitment to innovation, excellence, and trust. With a global presence in key cities, Cedrus continues to redefine wealth management with innovation and trust. Discover the Cedrus difference. Your financial success is our mission. Contact us today to begin your journey.